Another currency pair to discuss is British pound, US dollar currency pair. And as I have already mentioned, this week, finally, a formal Brexit will be triggered. All in all, we can see that in the recent days, the UK currency managed to significantly strengthen versus the US dollar. Partly it was because of the general weakness of the American currency, and partly it was because of the upbeat economic releases coming from the UK. For example, CPI figures pushed up through the Bank of England's 2% target, and UK monthly retail sales posted a stronger than expected growth of 1.4% and broke a weakening trend, which was present in the past 2 months. So if we want to make some conclusion on Brexit, we can say that the lengthy negotiations over Britain's departure from the European Union will finally start officially. And as most of the negative news and the Brexit uncertainty is already pretty much reflected in the pair, in the price and in the exchange rate of the British pound, we don't expect massive drops from this currency. So there may be some downward reaction in the US dollar, in the British pound, I'm sorry, but don't expect the move of the same force which was seen on the Brexit referendum. This is very unlikely. We can see it on the, let's have a look on the weekly chart, that on the weekly chart we are moving sideways. On the daily chart, we can see that the British pound is approaching resistance of the falling 200-day moving average, located at 1.2690. Here it is. Before that, the currency has ability to strengthen as it is above the weekly pivot point, located at 1.2446. We are now currently at the first weekly resistance level in the area of 1.2560, and second and third weekly resistances are located at 1.2643 and 1.2756. So the first level to support GBPUSD on the downside will be at 1.2446. and then 1.2360. All in all, yesterday's candle has a sizable upper wick, so some attempt of the British pound to get lower is actually quite possible. However, we can see that on the 4-hour chart, despite the reason for correction to the downside, this reason is represented by the divergence between the price and MACD indicator. This is the reason for GBPUSD to test lower levels, but there are support levels in form of the moving averages. Here you can see these lines at 1.2450, 1.2380, and 1.2325. So we'll be looking for this area to provide support for the British pound, as once again we should mention that Brexit is already pretty much priced in here, at least in the short term. No new things should emerge this week. I think that the best support, the key level of the levels we have mentioned, is the level at 1.2350. This is not only a pivot level, but also a visual support, an area which constantly supported the prices in the previous times. So focus on these levels, and here the British pound may once again find buyers and find demand, and may try to retest high levels once again.